Hindustan Unilever under pressure after its third quarter numbers came largely in line with very muted expectations. The company's profit after tax was boosted by a one-off gain on Pureit sales. The management expects moderation in consumption sentiment to continue.
Coforge and Persistent, on the other hand, see gains of around 10% on the back of a very good showing in the third quarter. Coforge's constant currency revenue growth comes in much higher than what the street was working with at around 8.4%, while Persistent's strong growth leads the stock higher.
Shares of Pidilite surge in trade on the back of an inline set of numbers. Total volume growth coming in closer to 10%, beating street expectations. The company says they've ramped up ad and promotion spends.
Tata Communications is under pressure despite the company posting decent set of numbers in the third quarter. Kotak Institutional Equities puts a sell call on the stock on the back of slower deal closures due to macro headwinds.
Paras Defence surges more than 3%, now up 8% as the company signed an MOU with the Maharashtra government to invest nearly 12,000 crore rupees for an optics park project in Navi Mumbai.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam, and yesterday we saw good recovery in the later part of trade, and today we're seeing some kind of a follow-through out there as well. So Mangalam, green on the screen, the Nifty at the high point of the day. We have the weekly expiry factor as well that plays out. So the bulls will be hoping to ride on these gains.
Let's see how that goes, Nigel. You know, the ingredients were in place for some sort of recovery. Yeah. The gift Nifty also gave you a dip at the morning. And the good part is that the broader markets are doing a lot better. Yes. Yesterday, even as we saw a recovery in the frontline end of things, the mid-caps were still underperforming. And today we have the mid-cap index up by about 2%. So we'll most definitely keep an eye out on how business for markets pans out in the second half of trade, at the high point of trade for the mid-cap index as we speak. But let's talk about a few ideas for profit in a market like this. Anant Chaudhary of Money Control Pro joins in with a stock that he's been tracking. Anant.
Stock we will discuss is SP Apparels Limited, a leading exporter of kids wear garments, supplies to major retailers such as Tesco, Kmart, Mothercare, primarily in the UK markets. In its retail division, a company markets the Crocodile menswear brand, also Angel and Rocket, a premium UK kidswear brand. We are bullish on the company due to its presence into niche kidswear market, which has high entry barriers. Also, company is backward integrated, makes 75 to 80% of its yarn requirement in-house. Global brands are consolidating suppliers, favoring large backward integrated players, and also reducing reliance on politically unstable Bangladesh. FTA with UK and Europe, that could also boost the addressable market for the company. Last year, company acquired Young Brands Apparels Limited, a Tamil Nadu-based garment exporter for 223 crore at 0.7 times FY23 sales. This expands the overall product portfolio for the company. This company serves to global brands like Jockey and Marks and Spencer across the UK, US, Japan and Canada. The acquisition offers cross-sell synergies for SP Apparel. It is also setting up a facility in Sri Lanka to reduce the labor cost. With all these strategies in place, revenue is expected to grow by 50 to 60% by FY26. Stock trades at 16 times on FY26 earnings.
All right, let's take note of the markets before we move on to the management on our show. The FMCG pack is in focus. Remember, HUL's muted set of numbers saw a stock decline, but thereafter the street believed that maybe, could this be the worst of the quarters coming ahead, and maybe things recover from here on as government spending ramps up, money is in the hands of people ramp up, and ahead of budget, is there any, sweetener coming in? As a result of which HUL, despite muted numbers, has recovered from the lows. Look at some other FMCG companies. Tata Consumer, for instance, has moved to the high point of trade. We're seeing some traction in Britannia as well. We have, a bunch of others as well. Nestle, for instance, opened lower, has now moved higher from the lows of today's trading session. And alongside that, we have Pidilite, which continues to do well, and a bunch of other consumer stocks which are doing a lot better as well. But let's talk about one stock which is on our radar, which is Polycab. The company's results for the third quarter came in fairly in line with street expectations on the revenue front, but the margins were a big beat at close to around 13.8%, and that was led by reduction in losses for the FMEG segment, along with better than expected margins for their cables and wires business as well. To discuss these numbers further and more importantly give us the outlook for the very near future, as the company has given us their 5-year guidance, we have Mr. Tongia, who is the Executive Director and CFO of the company. Alongside that, we have Mr. Inder Jaisinghani, who is the Chairman and Managing Director at Polycab as well. Gandharv, Mr. Jaisinghani, thank you so much for joining in. Let's start with the operational performance for the very near future. The margins were better than what the street anticipated, and that was because of one, reduced losses in FMEG and better than expected margin in cable and wires business itself. So on that front itself, if you could give us, what's the sustainable margin for the cable and wires business and FMEG? When does that break even?
Sure. As you know, in our cable and wire business, in general, our guided range is between 11 to 13%. As far as the 9-month performance is concerned, our actual EBITDA margin is within that range. Third quarter was slightly better, as you rightly highlighted, it is around 13.8%. We believe over the next few years, we should be able to maintain this EBITDA margin of 11 to 13%. And on FMEG, though we have reduced our losses over the period, as you rightly highlighted, we believe in next 5 years, as part of Project Spring, we should be able to get to 8 to 10% EBITDA margin slowly and gradually.
When does the break-even happen? Sometime in the next financial year or the financial year after that? As in, what we are trying to understand is, for how long do you invest in it before it breaks even?
So it should happen in near future. If you see our current 9 months performance, every quarter we have been able to reduce our losses. And in near future, we should be able to get to break even and then to profit. In a time or frame of 5 years, certainly we are confident that we'll be able to get to the industry leading margin of 8 to 10% in this business as well.
Okay, all right. Hi, gentlemen. Good morning and good to see you, Vin. Tell us a little bit about the cables and wire business. Out there, I'm looking at the growth. It's close to around 12%. Now, that's a little bit lower than actually what the street was working with. And it appears the volume growth could be in high single digit. Could you tell us, is demand slowing down? Is there competitive intensity that's ramping up as well? So what was the volume growth in the past quarter and how do you see the volume growth going ahead?
So in general, in 9 months time frame, our cable business has registered double-digit growth. Wires is a single-digit growth. As you know, over the period of last 5 years under Project Leap, we have been able to increase our market share. It is now more in late 20s, whereas 5 years back it was in high teens. We believe in next 5 years, as part of Project Spring, in cable and wire, we will grow at 1.5x of the industry growth rate. And in FMEG, perhaps we'll be able to achieve 2x of the growth rate. And profitability wise, on cable and wire, will probably continue with 11 to 13%. And on FMEG should be able to get to 8 to 10%.
What was the volume growth in the past quarter though?
So it was in the 9 months, it was in double digit for cables business.
Last quarter. 9 months is fine, we got that. But last quarter, what was it, Gandhar?
It was in high single digit.
High single digits. But is that because of competitive intensity ramping up, or was there a broad-based slowdown?
I think combination of several such factors, including what you mentioned. I think there is a slowdown in the public capex, which is also impacting. And the private capex is probably taking perhaps more time than what it was initially anticipated. So it's a combination of all such factors. But in general, at the industry level as well as the company level, fourth quarter is comparatively better than the other 3 quarters of the year. So we are optimistic about fourth quarter performance.
All right, that 20,000 crores of guidance, you're being very conservative, I would say. Why do I say that? Because if you have to get to 20,000 crores, you'll actually have to degrow in the fourth quarter, which I don't think that's possible. So could you clarify, will it be in excess of 21,000 crores? Just plugging in the numbers, if you did what you did last year in quarter 4, it'll be more than 21,000 crores. So you want to give us a revised number?
You are right. And that is why we are not giving any guidance of 20,000 crore any longer. The 20,000 crore guidance was given in fiscal 21 when our top line was 9,000 crore rupees. And our ambition was to get to 20,000 crore rupees in 5 years time frame, which is 26. As you know, in the calendar year 2024 itself, we have achieved 21,000 crore rupees of revenue. And that is where we believe we have already met our expectation ahead of the timeline which we had committed to our stakeholders. Now, as part of Project Spring, in the next 5 years, between 26 and 2030, we believe we will be able to grow at a rate which is going to be significantly better than the industry growth rate, both on the cable and wire business as well as FMEG business.
We have that number. We have, how faster you will grow versus the industry. Do you have an aspirational revenue target here? Say 20,000 crores is what you've easily manage to achieve for the next 5 years? Do you have an aspirational revenue target from here on? Say, maybe, should I put that number? Mr. Jaisinghani, how about 50,000 crores?
Yeah, we can think of that, but we are thinking very clearly that we will grow 1.5 times than the others. And demand is there. We have to build the capacities and we have to build all systems and everything. And we are on the job. I think so we'll reach at least by 40,000 crores.
All right, at least 40,000 crores. Aspiration would be 50,000 crores. Mr. Jaisinghani, just on the capex itself, you've in this plan also given a capex guidance of close to what, 6,000 to 8,000 odd crores. What we want to understand is what would your annual cash generation be for you to be able to fund this capex along with the increased dividend payout that you have, close to 30% is what you've announced, because most on the street were working with close to around 3,000 to 4,000 crores in terms of a capex over this period itself. So this increased capex guidance that you have has the street wondering about the funding of this. Would it entirely be done internally?
We just attempt that. You're right. Our guidance of 3,000 crore rupees, but that was for a period of 2.5 to 3 years. And if we were to think of 5 years, we believe as an investment of between 6 to 8,000 crore rupees is required. As far as the sources of these expenditure is concerned, it will be through internal accruals. We are already generating fair amount of cash. As you know, the profitability has improved over the period. And after factoring dividend payout and capex, we will be then also left with some additional cash in the books of the company.
All right. What about FMEG as a percentage of the mix? What would it look like? If you could move from 20,000 to 40,000 crores with an aspiration of going towards 50,000 crores, what will the FMEG part of the business look like?
So FMEG, as you know, even today is a comparatively small business for us.
Yes.
It is between 8 to 10%. If cable and wire business continues to grow at a rate which is going to be 1.5x of the industry growth rate, I don't believe that FMEG will become very, very meaningful, but certainly it will move up. I think these numbers are dependent on several factors. It will be difficult for us to put a number to it, but it has to be comparatively better than what we have today.
Since you just spoke about the capex plan, what is your current utilization levels in your businesses? If you could explain it to us vertical wise.
So in cable and wire, we are between 70 to 80%. In FMEG, utilization is between 40 to 70%, depending on particular product category we are talking about. And we believe that with the additional capex in the years to come, we should be able to improve utilization slowly and gradually.
And in FMEG itself, if you could give us a sense of what the product mix would look like, because, your fan share is coming down, your switches share is coming up, high margin businesses are improving as well out there. From an aspiration standpoint, what should your product mix in FMEG look like? How much is fans? How much would be switch gears? How much would be newer categories that you would enter?
So as of now, we are not planning to enter into new product categories. We'll continue to have the same product in our portfolio: fans, lighting, switches, switchgear, and a small contribution from conduit pipes and solar inverter. As you know, switches and switchgear are slightly more profitable than the other products, and that is why we have made focus efforts over the last several quarters to increase the contribution of switches and switchgear to FMEG business. We believe that should improve meaningfully in times to come, followed by fans and lighting.
Okay, all right. Any inorganic growth plans?
Nothing as of now.
Pleasure talking to you all as always. Thanks a lot for fielding all those questions, and look forward to chatting up with you all. Don't let us wait till the next quarter. Maybe we could do one sometime during the fourth quarter itself. But thanks for joining in, gentlemen. Well, for the time being, we'll slip into a short break. Come back, we'll focus on markets and stock-specific action. Don't go anywhere.
Welcome back. Let's bring you some news which is likely to be negative for L&T. And this is what we understand from government sources, that the MDL in Germany's ThyssenKrupp Marine are likely to qualify for the government's mega 70,000 crore submarine project. Parikshit joins in with the internal details that he's gotten exclusively. Parikshit, does it mean that L&T has lost this contract?
Well, it seems so. This was supposed to be one of the biggest defense deals in India in the year 2025. There were only two groups which had submitted bids for the program, L&T, along with Spain's Navantia, and Mazgaon Dock Limited, along with Germany's ThyssenKrupp Marine. We've been told by our sources in the government that a technical oversight committee of the Ministry of Defense has found only one bid responsive or qualifying the eligibility criteria, and that is the bid by Mazgaon Dock and Germany's ThyssenKrupp. So it seems at this stage that L&T has lost out as far as this mega P75I project is concerned, but a final decision has to be taken by the Defence Acquisition Council. So we'll have to wait for that, but we do expect the DAC to meet very soon to examine what the Technical Oversight Committee has said and take a decision. But for the moment, clearly it seems that Mazgaon Dock Limited and Germany's ThyssenKrupp are the front runners and are in the driver's seat as far as this P75 project goes.
All right, Parikshit, thanks a lot for stopping by and giving us these details. Negative for L&T, but the final word on this is not out yet. Let's bring in Sachidanand Uttekar of Trade Pulse for a quick technical check on the market. Sachi, there's a bounce back that we're seeing, but seems like at higher levels there is a lid which comes in from the FII selling as well. Do you think at any point in time that lid's going to go off and we'll see a bigger move, given the sort of up move that we're seeing in the mid-cap end after the big dropping?
Good morning, Mangalam. Good morning, Nigel. And clearly, I think yesterday's momentum has been very strong. In fact, if you look at today's setup, it clearly looks like the main level which Nifty has to negotiate on the higher side is 23,260. The moment we see it trending above this particular level, we will see a very strong short covering move unfolding on the higher side, which could push the index towards 23,350, 400 kind of a zone. So I think this overall trend momentum that we have been seeing since yesterday, it should continue on the higher side. We are seeing some fresh developments of a base somewhere close to around 23,140. So probably, even on a decline, some long positions can be added in Nifty. One can keep stop loss at 23,120 on a closing basis and expect a move towards 23,400. When it comes to Bank Nifty, the base looks strong at around 48,600, but even here, I think the important level on the higher side is placed at 48,960. The moment we see this particular level getting breached, then probably we may see a very strong comeback even in Nifty Bank. But I think the focus would be on Nifty itself. We are having strong evidence of a fresh breakout, and probably we may see an extended rally towards 23,400.
Okay, all right. Extended rally, not ruling that out. Thanks, Sachi, for that. What about individual stocks? What's on your radar?
Good morning, Nigel. Nigel, two stocks. In fact, both the stocks have been displaying relative strength since last 2 weeks. One of them is Maruti. Now, if you look at the overall structure, the stock was consolidating for the last two trading sessions near that 12,000 mark. If you look at the overall, setup of its weekly ADX, it has started to trend above that 24-25 mark, which is a breakout zone. Plus, we have seen a very strong put writing action at around 11,800. So probably it looks like an elevated base, a bullish flag formation on the daily scale, which is exhibiting a price target close to around 12,580. And that's why we have also recommended it to our clients. We're expecting this particular move to unfold in two phases. The immediate target is placed somewhere close to around 12,240. The positional target is at 12,580, and we are recommending building long positions in Maruti. One can keep a stop loss at 11,960 on a closing basis. The other stock which we just discussed right now is Mazgaon Dock. Even here, if you look at the last 2 weeks, the stock was outperforming. It has shown a very strong stable price performance. The overall structure also looks like a bullish flag formation, but on the weekly scale itself, the breakout is established well. It has been holding on to above that 2,300 mark. We are expecting this move to extend towards 2830. Trading target is placed somewhere close to around 2650, and that's why even here we are recommending building fresh long positions, keeping a stop loss at 2330.
All right, we take that point. Thank you so much for joining in and giving us your views on the market as well as individual stocks. Take a short break, come back, get you more on the markets. They are buzzing though. We have seen a sharp fall in the Nifty Bank actually. The Nifty Bank has now moved into the red, so keep an eye out on that. It's just a swift decline that we've seen on the Nifty Bank. It's led by HDFC Bank. The intraday comes up for you. And as a result of which, the Nifty too has given up some of its gains. We'll take a short break, come back, focus on the markets once again.
Welcome back. Well, speaking to Shireen Ban at Davos 2025, EY India's Rajiv Memani says that relief on personal income tax for urban, lower and middle income groups will boost economic growth. Let's listen in to what he had to say.
The urban, lower income, middle class people have got really impacted because of inflation, and also if you want to get consumption back. I think income tax relief at those levels and meaningful income tax reliefs, I think will have a great impact on the consumption story and overall ability to spend.
So tweak the 30% slab and perhaps...
It starts at 15 lakhs, you can take it higher, then you have a rebate, you can take the rebate higher. So there are ways in which you can do so that that benefit is given to people in the lower to middle income category, so that they can hopefully, and a lot of that money goes into consumption, doesn't go to savings. A lot of that comes back to government. A lot of them creates employment. So the mindset, and if you look at the tax buoyancy, personal tax buoyancy, even this year, the personal tax revenues have grown by 22-23%. So the government has done a great job.
But they're short on GST.
They're short on GST, so the best way to get GST is to get consumption going.
Right, with that, we'll wrap up on this edition of Chartbusters. The news that the Nifty Bank, which is top, between Nigel and me, is in the red right now, and as a result of which the Nifty too has fallen off the highs. Keep an eye out on the market. Is there any recovery in sight or not, or whether this recovery has been sold into as well? We'll leave it to the team of Trading Hour. Thank you for watching.